Hello there, this is James and you're watching Tixee Live. In today's program, we have a lot to cover because what a day today has been for the markets. A lot to cover. But before we begin that, don't forget, these little videos are for educational purposes only and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own diligence. And of course, know the risks at hand before entering any trade. So, what a day. What a day. So, let me start off with telling you what has happened over the last, say, 24 hours or so. In short, the markets have had a very bad day. Very bad day. It actually started yesterday in the US session, okay, where the US stocks experienced their biggest one-day drop since 2020, since summer 2020. And bear in mind, in the summer of 2020, we were still going through the lockdown, the global lockdown. So it's had the biggest one-day drop since then, okay? In fact, yesterday, the S&P fell by 4%, Dow Jones by 3.5%, and NASDAQ, which has been having a very bad year since very bad year from January onwards, fell 4.7%. So it was almost like a bloodbath on the market yesterday. We'll come to the reasons why we're experiencing this a little bit later. But on other things, someone else had a bad day as well. A lot of people have a lot of things had a bad day, but a certain person also had a very bad day, and that person we had spoken about a fair bit over the last couple of episodes keeps popping up. Keeps popping. And that was Mr. Musk. Yesterday, he lost 12.3 billion in a single day. For him, to be fair, it's probably, but it's still a loss. 12.3 billion is still a pretty big loss, even if you are apparently the richest man on the planet. And in fact, interestingly enough, since, and I want to have a look at this, actually have a look at Tesla in a minute, because, we all know about the ongoing confrontation between Musk and Twitter and the CEO and all that drama, and we'll have a look at it. But since he put his bid in on the 25th of April, he's lost 49 billion since then. 49 billion since then. And yeah, let's have a look. Actually, let's have a quick look at Tesla because this is quite interesting, I think, to look at. Now, on the 21st of April, it was trading around $1,066 per share. Around the 25th, when Musk put his bid in and announced it, it's dropped dramatically there, and it's been since then trading around $706. So that's a pretty big drop off. Pretty big drop. Is under a month, if you think about that. It's from the 21st. It's nearly a month actually. It's the 20th tomorrow, obviously. So that's a really big drop off. So it goes to again opens up the rumors why Musk is having this issue with Twitter and the spam bots, so to speak. Is he trying to get a lower price, or is it a case of that he simply can't afford to do that transaction now? And that's why he's trying to save face and back out of the deal by saying, I would have done the deal, but I'm very nervous about these spam bots. But in fact, it's because financially he's not in a good place. Because remember, he always says he's asset rich, not cash rich. So that could be the thing. Anyway, it's enough about him. He's taken quite a fair bit up on this program over the last couple of episodes, but it's quite entertaining to talk about him, isn't it? Okay, so we know that US stocks had a bad day yesterday. We had a look at it. We discussed it. How is the European session done? Well, from the very beginning of the session, European stocks did follow suit. Okay, they also went into the red quite dramatically, and we'll have a look at a couple in a minute. I'm pleased to say since then, though, however, we are off the lows of the trading session. However, so far, currently the FTSE is minus 1.76%, DAX is minus 1.66, the Euro stock is minus 1.06. So earlier on in the day, they were looking close to 3% minus. So they're off the lows, but still, it's been, Europe has followed suit. So we are having quite a dramatic day in the market, and it's been quite heavy. Now, if we have a quick look, let me pull up my charts. Let's have a quick look so we can look at the FTSE, look at the DAX, etc. Let's have a quick look. Let's bring up the FTSE first, UK 100. Come right here. Let's have a look. Yeah, as you can see, it is off the lows of the day. So we've had a bit of buyback, but look at that. It had crashed just above 7222.05. So a huge amount of pressure on the FTSE today. We're off the low slightly. We're trading out 1265. But like I say, it has been a big sell-off. It's the momentum we started with the US session. So that's where that. We look at let's have a look at, see if we can have a look at the DAX, German. Again, very, doesn't look visually as dramatic as the FTSE. But like I say, we have hit the low, around the low 136.91 today. We're off the low slightly at 13773, but still pretty scary day for the stocks as it stands. So yeah, let's have a so yeah. So what's been the cause of this then? Okay, what has been the match which lit the barn alight with this this firestorm, so to speak? Well, it's the fear now that high inflation is beginning to hit corporations, and it's not just about us little people, so to speak, us spending our money and buying things. It's the reality that it's beginning to hit corporations now as well. Now, don't forget yesterday, and we'll have a look at both of those in a minute. Yesterday, I talked about Target, 8th biggest US retailer. Okay. And they put their quarterly profits in. It was half quarterly profits. And the day before that, Walmart, another massive retailer in the US, pretty much announced the same thing. Okay. In fact, in total, over the last 48 hours combined, those two companies have lost 65 billion in value. Okay. So here's the fear that now we're beginning to see, because of inflation and because of these issues, we're going to see corporations get hit. Okay. And the problem is a lot of these corporations, and I think Target, admitted it. They are, for example, the costs for Target now, they said, what was it? I read it here. Yeah, they realized that their total costs for transportation and things like this will be 1 billion higher this year than the previous year. So that's whopping. So they are, these companies have come out of lockdown, the pandemic, and got all the stuff back, got inventories and things like this. Inflation is hit. Okay. So customers aren't spending as much. Plus, it's getting more expensive for them to get the goods in to sell to customers. So now the corporation is going to suffer. Okay. And here's the big fear. This is why the market is reacted the way it has. Okay. At the same time, of course, then we have the argument, obviously, is that one thing, saving grace, we have had over the last couple of trading sessions, and we've talked about on this program, is we have had a good labor market. I've got some job data to talk about in a little while. A good labor market. If corporations are costs are increasing, okay, and they're not making as much money as they need, then they are going to maybe have to look at their staff, obviously, their workforce. So then that will have possibly have a knock-on effect with the labor market, which has been, like we have discussed several times, pretty impressive. So there's the fear with that. So this is really, really what's happening. So let's have a quick look. Actually, let's have a look. Let's have a look at Target and Walmart, actually, because we looked at Target the other day, and we did discuss how it opened after that news of their profits obviously being halved. And as we could see, it opened with a huge, gigantic gap, a huge, gigantic gap. It was trading before the announcement around $211, and obviously it closed around 116. That was a big, big gap. Walmart, let's have a look. When they announced something similar, two big gaps, 2 days in a row. That's when they made the announcement. That was the gap on the trading session afterwards, and that was the following trading session yesterday. So yeah, these corporations, again, this is what's underlying the fear at the moment of, you know, how things are potentially looking. This is how the market's reacting. Okie doke. So what is the market doing though? What is the market doing? And there's three things I actually really want to discuss and show you. They're desperately seeking a safe haven. Now, those good people who have watched me in my previous programs, you've heard me speak about safe havens. Of course, don't forget, safe havens are assets the market goes into when times are scary. They move their money out of risky assets and they look to place their money in safe havens. And as we've discussed over the last couple of programs, the US dollar has been the safe haven of choice. Not anymore. Not anymore. In fact, dollar's not having a great day despite all this. Instead, the market has looked towards the two other well-known safe havens, the Japanese yen and the Swiss franc, and they both had pretty good days. And let's have a look. Let's pull up my charts so we can have a look at it. Okay, so let's go straight. Let's go and look at the Japanese yen first. And this is on a 4-hour chart. And as you can see today, the yen has gained strength against the dollar, so it has been the safe haven of choice. But interestingly enough, I had a look at the trend. Let's put a trend line in here, and you can see the tide started to turn against the dollar a little while back ago, actually, for the yen, and the yen broke that trend line. So, you know, currently, obviously, the target or potential area of interest for the yen is 126.89, that level there. That's what I'm keeping an eye on. So that's quite interesting. It did actually start changing momentum around about the 12th of May. Now, what's really interesting, though, which I find really fascinating, I actually looked at this yesterday. I took an interest in this. Yes, this is a 4-hour chart. I took an interest in this yesterday. I thought this was interesting. Okay. And, oops, that's not quite right. Let's just get it properly. Let's do it properly. Did a trend line. This is a dollar Swiss, okay? There we go. Best I'm going to get. Now, I looked at this yesterday, excuse me, and I could see around that time, it was beginning to test this trend line. You know, the theory is if the trend line can act as a support and then breaks through, and once it's broken through, it can then act as resistance, and then it gives you the indication that the trend has changed. Okay, so clearly the Swiss franc has broken through that trend line. And like I say, the Swiss franc against the dollar has had a very good day. In fact, just before I came on air, it was actually the US dollar Swiss franc negative minus 1.14%. So the Swiss franc has had a good day. So the market is beginning to look for safe havens, And this brings me on to my other point, actually, and this is really interesting too. Now, you remember in other episodes, I've spoken about, okay, I talked about gold, and I'm saying that obviously the dollar, because of dollar strength, gold was quite weak, but I mentioned the safe havens were the US dollar, Swiss franc, Japanese yen, okay? Swiss franc, Japanese yen are now showing their status as safe havens. The dollar has been showing its status as a safe haven, not so much at the moment. But the Japanese yen has, and the Swiss franc has. But guess who all of a sudden started showing its true form again? And that is gold. Gold has again benefited from this safe haven desire, so to speak. And you remember over the last couple of programs, we were watching this key level of 1,833. It's now broken that. Finally broken. I mean, we watched it on a good couple of times. It's trying to break that level, and we always said that was a big key level of interest, and it couldn't. It's now finally above that, and it's trading at 1,833. $840.84. So it is sort of breaking through that level. So maybe, I'm not saying for certain that gold, Swiss franc definitely is desired as a safe haven right now. You can see it with the Japanese yen right now. I'm not saying that gold is definitely returned because it's been a long, hard struggle, but there is signs that potentially it is potentially returning back to its safe haven status. And with the fact that the markets have been very fearful today, and we need to see how the US session opens in, say, 14 minutes, does it carry the momentum on from yesterday? It'd be interesting to see how gold performs. So I'll be watching gold really, really carefully. The next level, if we can keep continuing this momentum, we are above now the 50, the 100, and the 200 moving day average. If we can keep going, then really the next key level is going to be around here, around 1,853. That would be the level I'll be watching. But okay, we are broken above it, but it doesn't necessarily mean we're going to stay above it, obviously. But that's interesting. A bit interesting. It'd be interesting to see if gold has indeed returned back, because I've missed it as a safe haven. So yeah, just to underline that, okay, the Japanese yen and Swiss franc are safe havens, and the dollars had a pretty not an amazing day. Let's have a quick look at the sterling. The sterling's gained strength against the dollar, despite obviously the risk appetite on the market. That's more down to dollar weakness than risk appetite. Is down to dollar weakness. Currently trading now back around 124,457. Again, that's the key level, just below 125. If we do the 4-hour chart, remember, this is the key in it. This level here, we said the level it broke before the Bank of England. That's the level we need to really aim for if it's going to get properly, hopefully back to bullish momentum. Then if we look at euro dollar as well, yeah, okay, not terribly, it's not because of risk appetite, but it has held its own pretty much against the US dollar today, mainly down to dollar weakness. Okay. Need to find my mouse. There it is. Found it in the end. Other announcements today. Again, remember I talked about the labor market and the concerns about the labor market, what I said earlier. Initial claims was announced today. Remember, that's the amount of US individuals initially signing on for unemployment benefit. The number came in slightly higher than expected at 218,000 versus 200,000. Not, that's scary, sort of like news breaking, but again, something to watch. And with all these corporations reporting heavy losses, it'd be interesting to see what that number is over the next coming weeks. So we'll be keeping a close eye on that. Finally, the only other thing, tomorrow, UK retail sales. Again, remember, we have inflation at 9% in the UK. It'd be interesting to see if the consumers are still out there with these high prices. So that will be a key thing to watch. Oil is under pressure today, but we'll talk a little bit about that tomorrow, because that'll be at tomorrow's program. Yeah, don't forget, you can always ask me questions if you ever have any questions. I am live on air. And like I say, if I know the answer, I always certainly will try and answer it. If there's no questions, okay, no problem. If you're watching this episode on Facebook and you like it, give us a follow. If you're watching this episode on YouTube and you like it, subscribe. Hit a notification button so you know next time I'm going live. If you enjoyed this episode, give me one of these. Make me smile. And on that note, remember, these little educational episodes are, educational. These little episodes are for educational purposes only, and in no way whatsoever should be taken as advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.